Good evening. I'm Chris Hurt, and we are here tonight to share a huge new prediction and warning from Jeff Clark. Jeff is a former $200 million money manager whose clients included 100 of the wealthiest people in California. He handled accounts worth up to $30 million, and for very good reason. Just prior to 1987's Black Monday, Jeff made 10 times his money. During the dot-com era, Jeff made a single trade that netted him and his clients more profits than most people make in a lifetime. When Jeff accurately predicted the 2008 crash, you could have doubled your money 10 different times on his recommendations that year alone. When he called a crash just prior to the coronavirus panic, you could have doubled your money 9 different times leading up to it and doubled your money 3 additional times as it unfolded. And after Jeff warned about last year's sell-off, posting a dire warning just before New Year's Day of 2022, you could have doubled your money 14 different times with his recommendation. And now, as bank runs disrupt the financial system and experts give conflicting advice on where the market's going next, Jeff is stepping forward tonight with his biggest announcement since March 9th of 2009. A simple action that he warns you must take before May 1st for the chance to once again make multiple times your money. So, Jeff, without any further delay here, you got to tell us what exactly is going to happen on May 1st.
All right, well, Chris, I'm thinking we're going to see a historic reset of the U.S. stock market. It's going to be a moment kind of like what we saw back on March 9th of 2009 when the entire narrative of the market changes. Now, remember, that was the day stocks bottomed following the worst financial crisis in a generation. And then we went on to see the longest bull market ever. But here's the thing, it's not going to look like any bottom that you've ever seen before. In short, it's going to roll. And tonight, I'm going to explain exactly what I mean by that, including a free recommendation and even a free giveaway of the technique that I'll use to play it. Now, most important of all, I'll show you where to move your money to see the biggest and fastest potential gains, but only if you're willing to get out of banks by May 1st. And tonight, you'll see why.
Okay. And speaking, you mentioned 2009. You were invited onto CNBC that year, I think, right?
I think it was 2009, yeah.
That was right around the turning point, I think, that year.
Yeah, and I turned down CNBC, and that's because I've spent 40 years developing a technique for spotting the biggest turning points in the market, those classic reset moments when you go from, you can go from making maybe 10% to making 100% if you know about a particular vehicle to put your money into, which appears after every sell-off, especially the kind of roller coaster market that we're seeing today when people they've been so edgy.
Yeah.
And we're seeing bank runs. I mean, heck, we just saw the biggest bank collapse since 2008. And my technique is all based on doing the exact opposite of what the masses are doing, which is yet another reason I think very few people are ready for what's coming this year. You see, anyone can make good money during a bull market, but it's what you do immediately after a bear market, those reset moments when the sentiment changes, that could truly make you a killing. The kind of money that enabled me to leave my money management firm when I was 42 years old. And sadly, most people miss these moments for a simple reason. They've either gotten in too early and already suffered crippling losses, they stay in cash and get in too late, or they get into the wrong investments entirely, all based on nonsense from the media. And that's why we're holding tonight's event. I'm going to explain exactly when I predict this reset moment is going to accelerate, why it'll look different than the end of any bear market that you've seen before, and how you could double your money 10 times if you get into a particular vehicle by May 1st, as I've shown before in similar conditions. You'll see why your cash in a bank or T-bills is a big mistake.
Sounds exciting, but if this were coming from anybody else, Jeff, I would probably have serious doubts. But you know what? Altogether, I know that you have booked something like, over 125 different gains
something like that,
of 100% or more since you first joined our industry. And of course, you've been flooded with notes from across your suite of research. We got one here from Brad Kay, who says he made $90,000 in 2 weeks on your recommendations. That's amazing.
Well, Chris, I say all of this with one reservation, and that is before May 1st, you have to move your money out of banks and into a vehicle 40 years in the making that could make you a huge potential gain as the next historic reset unfolds. And I'll tell you up front, it's not a stock, it's not a bond, it's not crypto or anything that you likely have any experience with.
Okay, well, hold on then, because if I'm hearing you right, this is actually great news, right? That's what we're getting up to. You're essentially calling the bottom of the bear market that we've been trapped in for more than a year now.
Well, yeah, no. Here now, tonight, I'm calling the bottom in the market, yes. But it's not going to look like any market bottom you'll hear about in the news or even in most textbooks. It's not going to be a single fixed day event. You know, to understand how this whole thing is going to play out and what the rest of 2023 is going to look like, first you need to understand exactly what I mean by a reset of the market. So consider the dot-com crash, for instance.
Yeah, well, that was certainly a turning point for the market.
Yeah, right. If you got hurt in 2022 and you've been around for a while, you might have thought back to the dot-com blow-up, right? And those who remember it, it was nasty. The NASDAQ fell 75%. Think about that. Almost all the gains from the dot-com bubble were wiped out, with many startups going bankrupt. And it dragged on for a long time. I think it lasted something like 2.5 years.
And Jeff, I know that it suckered a lot of people in too, because if I remember right, even as the market soared higher during the bubble, stocks saw 5 different pullbacks of 10% or more, and people bought that dip all the way down.
Yeah, so when the real blow-up finally happened, most people refused to believe it until what I call the moment of capitulation. And that was on March 12th of 2003, a moment when everyone had basically given up on stocks. I mean, it's an ugly moment when the masses all say to themselves, I don't want anything to do with stocks ever again.
Yeah, the losses were incredible at that point, right?
Right. The emotional pain of all the missed opportunities, all the money that you've lost, that's the moment of capitulation. It's a feeling of utter hopelessness when stocks have no choice but to go back up because everyone else has sold.
I'm well acquainted with that feeling of hopelessness, as you said. And that's when the market resets. That's what you're getting
that's
to.
exactly right. And in that case, again, it happened on March 12th of 2003. If you'd bought in, even within just an index fund or even a handful of stocks, you'd have done just fine. The market almost doubled over the next 4 years.
Right. But I take it you didn't buy stock?
No, I didn't buy stocks. And that's because after every major sell-off, there's a rare vehicle that appears in the market that could make you 5 to 10 times more money than shareholders in a fraction of the time without the risk of holding shares at all. You know, for example, I found this vehicle in the tech sector after the dot-com bubble topped out and booked gains of 1,391% in about 78 days, 1,263% in 68 days, 1,007% gain in 42 days, and a 1,285% gain in just 48 hours.
Now you just named 4 different 10 baggers, which means you nailed the bottom.
Well, I wouldn't say that. I couldn't actually see the bottom yet, Chris, but I could smell it. Right. So, for example, about 2 months before the bottom, I booked an 81% gain in 15 days on a vehicle in the credit sector. And about a month after the bottom, I booked a 37% gain. So I had a sense of what was happening without actually knowing the exact date of the bottom. And as I'll explain, this is going to be critical for 2023.
Right. And I imagine most people miss those gains entirely.
Yeah, and that's because when the reset takes place, most people want nothing to do with stocks anymore. So they lock up their cash. And that's one reason why we're seeing bank runs, and it's a big mistake for 2023. Any nominal interest that you collect on T-bills is going to be wiped out by inflation and cause you to miss the biggest opportunities. Or they buy and sell at all the wrong times based on the hottest new opinion by some talking head on CNBC. But hold on, Chris. Here's the interesting part. Most people think the only way to make serious money after a big sell-off is to back up the truck at the perfect moment, right?
Right.
Well, I'm here to tell you there's no such thing as nailing the perfect moment during a reset. The fact is, you could make a lot more money by mostly avoiding stocks and only investing in a relative handful of vehicles that represent maybe just 1% of what's available in the market, each at different moments. For example, during the historic bottom in 2003, I found just 6 of these things. But you could have doubled your money in just 31 days on one of them, while most shareholders had to wait 4 years to see a gain like that. And the way we identify these, they're even lower risk than owning stocks outright. And we'll cover that in a moment.
Okay, so the moment of capitulation, I think you called it, we never quite saw that with the 2022 crash, did we? I mean, people suffered serious losses, but it never felt like a catastrophe where people just gave up entirely.
Yeah, and that's exactly my point. And it brings me to the big prediction that I'm making tonight for the rest of 2023. I mean, things have gotten ugly. There's no doubt about that.
Sure.
Disney at one point was down 50%. Facebook was down 58%. Home Depot down 33%. And we recently saw the worst week in the market since last June, and 3 different bank failures.
Right.
But in the midst of all of that pain, we've seen incredible rallies. For example, we saw the best January since 2019, which itself was the best year for stocks in 2 decades. So now there's a lot of confusion for most people. On the one hand, you have experts like billionaire David Rubenstein announcing that now is the time to buy and the bottom's already in. And then you've got an expert like Stanley Druckenmiller, another billionaire, who says that stocks could be flat for the next decade.
Okay, I didn't even know this. So who are you supposed to believe?
Well, to answer that question, I want to talk about the last historic reset that we've seen in recent memory, and that was back in March 9th of 2009.
Okay, which would have been the bottom of the '08 bear market.
Yeah, and there too, we saw a classic bottom, right? I mean, it was a moment of absolute hopelessness when people were losing their homes, getting foreclosed on because of the mortgage mania that had caused the crash to begin with. And you remember how nasty that got, right? I mean, we witnessed the collapse of Lehman Brothers. That was a 158-year-old Wall Street institution.
Yeah.
And that was the moment of capitulation. Seeing stocks collapse by 57% among the largest bankruptcy in the U.S. history. So how did people react?
Well, they stayed far away from stocks.
Right. And by March of the following year, there was literally nobody left to buy. And that's when markets bottom.
Okay, but at that time, nobody knew the market had bottomed.
Oh, of course not. Of course not. And that's the nature of a reset. In hindsight, you can always see the bottom with perfect clarity, down to the exact day. But at the time, it just feels like the end of the world and nothing much is happening.
Right. But I take it you saw it coming. Jeff Clark saw it.
Nobody ever really nails the exact date, right? And as I'll explain, you don't need to. But I can tell you that 6 days before the market bottom back then, I found one of the reset vehicles that I'm recommending tonight in the energy sector and booked a 58% gain in 8 days. And then 1 day after the market bottom, I found one of these same vehicles in the entertainment sector and booked a 60% gain in 3 days. Now, those gains might not sound all that impressive, but I found them by going long the market. Those were the first signs of life indicating that a bottom had occurred. The reset had begun. And the really big gains, the chance to double or triple your money in a matter of days, were right around the corner. And it's what I'm seeing today by May 1st.
So that was a bold position for 2009. I got to ask, how'd you do?
Well, 1 month after the market bottom, I applied my technique and once again went long. And this time it was on a home building vehicle. And I booked a 65% gain in 9 days. Again, that was on a home builder, which had been the source of all that pain back in 2008.
Exactly. And that's how you knew the market would turn around.
Well, I strongly suspected it. So, yeah. And sure enough, we slowly embarked on the longest bull market in history. And I booked gains of 100% in 2 days, 109% in 14 days. 283% in 84 days, and just a whole lot more. All in 2009 alone, in a variety of different sectors, without ever touching a single stock along the way. And in a fraction of the time, you'd have seen those gains as a shareholder. And again, we did this using less than 99% of the existing investments in the market. As Journo R wrote me during the recovery, my portfolio was down to about $170,000 during the November of '08 lows. Now it's at $480,000, and a lot of the credit for that goes to Jeff and his recommendations.
Got it. Well, now I'm beginning to understand why you try to smell out those reset moments, Jeff, because it does sound like it's an incredible opportunity to make money.
Right. And again, on the one hand, if you knew when the market was about to reset into a gradual bull market, you could simply buy an index fund or maybe a handful of blue chips and hold on to them, and you'd probably do just fine.
Right.
Or you could do something much different with your money using the little-known vehicle that I want to cover tonight for a chance to make a whole lot more money faster.
All right, let's talk about that. What is the vehicle exactly?
All right. Well, it all amounts to a trading technique. And it's going to be critically important for 2023 because I predict 2023 will not see a classic bottom at all. The reset's going to take the shape of a form that'll confuse most people, which means you may not have the chance at all to back up the truck on stocks that maybe the way you were hoping to.
Right. So you're saying 2023 is not going to see that classic moment of capitulation, as you called it, when everyone and their brother is giving up on stocks.
Yeah, I think it's going to look a lot different, Chris. As I'll explain, it's going to roll. And again, if you want the chance to make the most money as quickly as possible, you don't need to know the exact date of the bottom. Instead, we use a powerful trading technique, a way to make 5 to 10 times more money than shareholders in a fraction of the time without ever owning a single share along the way, and with even less risk than holding stocks, as I'll explain. And it's all by using a trading vehicle that appears in the market after every major sell-off. It's how we also nailed the market back in 2010, the second year of that reset following the '08 crash. And we booked gains of 100% in 5 days, 106% in 15 days, 100% in 10 days, and a whole lot more.
Well, can walk us through it if you could. Could you
Right.
take a minute?
Sure. Well, let's consider the last historic reset. That was back in March of 2020.
Okay, now hold on though, Jeff. Let me stop you right there, because in that case, you really did nail the bottom there, right? As we all remember, back in 2020, we saw a series of the worst one-day drops ever as news about that deadly new virus caused airports and schools and businesses to close. And all the way down, many experts predicted the market would bounce back, but not Jeff Clark, right? On February 21st, I know that you wrote, the market still has more work to do on the downside. It needs to get investors to panic. Then on February 25th, you wrote, the stock market is set for a bounce this morning, but it's unlikely to hold up. The market still has more work to do on the downside. Meanwhile, Jeff logged a 144% gain in just 19 days on the Technology Select Fund without touching a single share, even as news of the virus grew worse. Then, we're 2 days later, on February 27th at 6:02 a.m., Jeff kept this message very simple. Quote, it's going to get ugly today, end quote.
Well, if I
Right?
remember, it got very ugly, yeah.
Right, and that you were right. That day turned out to be the worst one-day drop in the history of the market up to that point. But you continued to warn that the pain wasn't over yet, and sure enough, the market did continue to fall. But instead of panicking, Jeff predicted March 23rd would mark the bottom of the market. He applied his technique, booked a 53% gain in just 24 hours that day on the Financial Spider Fund, which may not sound important, but sure enough, the 5,000-point drop by March 23rd did mark the end of the crash, and then Jeff went on to book just shy of a 100% gain in only 3 days on the Vanex Semiconductors Fund, and as ever, without touching a single share of stock along the way. The beginning of a long string of winners. So in that particular case, Jeff, I think it's fair to say that you did see the bottom coming. It's one of the reasons we're here now and holding this event and talking about it.
Well, okay, that one I did see it coming, yes. But the moment of capitulation was kind of easy to spot. You know, the day before stocks bottomed back then, CNN had published an article on doomsday predictions. So you could smell the fear and the hopelessness. And that's when I knew the market was ready to reset.
Right. So how'd you play it?
Well, there were two choices. I mean, you could have bought stocks, which wasn't a bad move. I mean, heck, the S&P went on to see its greatest 50-day rally in history.
Right. But again, we've talked about this before, you didn't touch stocks at all. Right?
No. I mean, take energy, for example. You know, prices plummeted because transportation had come to a halt. And the Energy Spider Fund, for example, had crashed by 62%. And if you knew a reset was coming, you could have just bought the stock, right? And sure enough, it went on to double over the next 15 months.
Which is not too shabby.
Well, sure, but I didn't go near the stock. You know, instead, I waited very patiently. I applied my technique to the Energy Spider Fund, and on October 21st, I recommended a specific vehicle to play a big move up in the stock without touching a single share. And you could have made a 210% gain in 27 days. And Chris, that's triple your money,
Yeah.
and more than 2 times more money than holding the stock in literally 1/15 of the time.
Okay, but Jeff, the reset back into the 2020 market, that was an absolute mania, right? I mean, it seemed to me like everyone became a trader literally overnight, and the market as a whole doubled. So can't you say that the smart move was to simply load up on stocks at that point in time?
I mean, you could have done that, sure. And so long as you knew to sell before the crash hit in 2022, right? And you would have done really well. But in the wake of the sell-off, I prefer a particular vehicle in the trading world that allows you to avoid the risk of owning stocks at all. And again, have the chance to make more money over and over again in a fraction of the time. You know, take the U.S. Natural Gas Fund, for example. You know, it more than doubled from its low in 2020 over 9 months.
And that's exactly my point that I'm trying to make. Who can complain about a game like that?
Well, nobody. Nobody's going to say, oh my God, I only doubled my money. But when a stock experiences a classic reset moment like the Natural Gas Fund did back in 2020, there's a rare vehicle appears right around the stock that looks a lot more attractive to me. And in this case, I applied my technique, I recommended it, and I booked a 105% gain in just 7 days on the exact same stock.
Wow. 9 months versus 7 days.
Yeah, I guess, you know, I've always been a little bit impatient, right?
Yeah.
But I just prefer the chance to make more money faster. And that's exactly what this technique allows you to do, especially after the sell-off like today. You know, that's when the potential gains can be really off the charts.
Impatience can pay, so to speak.
Impatience
But
can
hold
pay.
on here. So, because when the reset comes to an end, does your technique still work?
Well, take a look for yourself. More than 1 year after the 2020 bottom, we booked gains of 104% in 16 days on Applied Optoelectronics, 102% in 15 days on Barrick Gold, 183% in 17 days on the Gold Miners ETF, and there's a whole lot more, and all during the mania of 2021. And that's because once you've identified that reset moment, it becomes a lot easier to identify which stocks have already reset back into a top and which still have a long way to go. Take Sprouts, for example.
You mean the grocery store chain?
Right.
Okay.
After the big reset on March 23rd, many stocks hit historic new highs, right? But Sprouts didn't. 10 months after the market bottom, I looked at Sprouts and realized it was flat, but it still had room to run. So I applied my technique, found one of these rare vehicles for the stock, and I recommended it. And we booked a 167% gain in just 13 days.
Oh. And I'm sure people missed that opportunity, right? Because they'd written off the stock by that point.
Right. And that's what brings me to another reason that we use this technique, to find the opportunities that most people miss. Mm-hmm. For example, consider this, Chris. What happens when the reset goes the other direction? And a bull market turns back into a bear market, a year like 2022, for instance.
Well, generally, I would say people either hold on and hope for a turnaround, or maybe they just cash out and wait for the next reset.
Exactly. Most people lose money or do nothing. But here's the thing, nothing ever goes straight down. Even in the midst of 2022, by applying our technique, we could still see which stocks were resetting on a smaller scale. In other words, stocks on the verge of spiking up, even during the worst sell-off in 50 years. And often, they were the names you'd least expect. They weren't the Zooms and the GameStops and all the other garbage that attracted so much attention.
So what were they then?
Hanes Brands, for example.
The underwear company. You're kidding me. Really?
No. On December 5th of last year, I applied my technique to the market, and I determined that Hanes Brands would soon go up.
All right, why?
Well, the stock had been falling all year. It was down, I think, something like 59%. Mm-hmm. But by applying the technique that I once used when I was managing $200 million for CEOs and startup founders and even a vice president at Chevron, the technique that I've been refining for 40 years now, I knew Hanes was on the verge of resetting. And sure enough, if you'd bought the stock, you could have made 28% over the next 2 months. And 28% in 2 months is not bad.
It's not, right.
But instead, I found a particular trading vehicle for Hanes Brands. I recommended it, and we booked a 105% gain in 35 days. That's 3 times more money than owning the stock in half the time, without the risk of touching a single share.
All right. Jeff, I want you to explain exactly what this vehicle is, but real quick, I know you've shown this thing to tens of thousands of people from all walks of life. So let me ask you this up front. Do people find it hard to do this instead of simply buying stocks outright, shares of stock?
No, not at all. For example, we heard from Stephen G. from another area of my research, who made a 171.3% gain on one trade. And Bruce M., who more than doubled his money on 2 different trades we recommended on ExxonMobil and BP. Neither of these folks are professionals.
Right, it doesn't require any previous trading experience?
Nope.
Okay.
Heck, I showed my own teenage son how to do this.
Really?
And until then, he had never shown any interest in trading. But then we sat down at the kitchen table and I showed him how to buy this vehicle in his brokerage account as easy as buying a stock. He more than doubled his money in 2 weeks with Bank of America.
Oh man, I wish I was your son. You could show me the same thing. All right, so what is this thing, this vehicle exactly?
Well, I use an options technique. But keep in mind, I would estimate that maybe 99% of Americans trade options the wrong way. And I've developed my own technique that is largely opposite of everything you might know about options, which is what helped me generate millions of dollars in profits for my old clients. In fact, I even gave it a name last July. Take a look. Back on July 13th, 2022, I wrote that I saw a bottoming formation in Citigroup. And I noted so many of the bank stocks have been beaten down so badly that the chances for an upside surprise seem higher than usual. So I recommended what I call a penny option.
A penny option, what is that?
Well, here's exactly how I described it on July 13th when I recommended one of these on Citigroup. A penny option is an option that trades for pennies, about 35 cents or less. Your risk is minimal, just a few pennies. Mm-hmm. And if it pays off, it could generate enormous gains.
All right, so wait a second here. How could you be so sure the risk was minimal, so to speak? I mean, aren't options, to me, they're famously risky.
Well, if you don't know what you're doing, yeah. But in fact, most people don't realize options were first created to reduce the risk of holding stocks entirely. And in this case, to qualify as a penny option, I went one step further. You see, I was confident Citigroup was about to reset after a major sell-off, but I didn't just pick the stock at random. Here's what I wrote when I made the recommendation. Citigroup trades for less than 6 times earnings, and the stock trades for about half of its book value. That's historically cheap for Citigroup, but it's also cheap compared to the rest of the banking sector, which trades on average for about 10 times earnings and 1.2 times book value. That sets the stage for a possible upside surprise when Citigroup announces earnings on Friday.
Okay, that makes sense. So you predicted the stock would reset upon its earnings announcement on Friday, July 15th, and you knew the stock was already absurdly cheap. You just said so.
Yeah, and that's what I mean by a penny option. It's a cheap option on a cheap stock that we know is headed for a big move, especially the rare kind of move that I'm predicting for 2023. And sure enough, we were right. Citigroup released its earnings report, and we booked a 333% gain in just 48 hours on the penny option.
Holy cow. What is that? 4 times your money in 2 days?
Yeah, now meanwhile, look at this. The stock only went up about 8% and went on to do nothing over the next 6 months. And that's the first benefit of using options. Chris, they give you what's known as leverage. In other words, for every 5% move in a stock, you can increase your potential gain by 5 or maybe even 10 times higher, which can turn even the smallest stock move into a nice windfall. As Paul G told me, I made 275% on Citigroup in 2 days.
Man, nice windfall. No kidding. I got to admit, this is pretty awesome. I mean, you booked that kind of gain smack in the middle of last year's sell-off.
Yeah, I'm glad you mentioned that because the timing of that reset in Citigroup gets to my big prediction for 2023. Notice how Citigroup bottomed in the summer of 2022, even as many other stocks hadn't bottomed at all, right?
Yeah.
The majority of the market just continued to free fall throughout the rest of the year.
So you're saying that an individual stock can reset at any time, regardless of what's happening to the market at large?
Correct. And that's where this technique really shines. You see, the reason most people lose money in bear markets is because they have no idea when things are going to turn around.
Right.
You know, they're constantly buying the dip and hoping the bottom is going to come around any day. In fact, this happens so often, there's a name for it. It's called a bear market trap.
Oh, yes, I'm familiar with that term, but walk us through exactly what that is and what it means for this year, 2023.
Okay. Well, a good example is Smith & Wesson. You know, back in May of last year, the broad market was kind of a mess.
Yeah.
I mean, we'd seen a major sell-off, and Smith & Wesson, this gun maker, wasn't spared. I mean, take a look. It was down 23%. But on May 24th, I applied my technique and determined the stock was about to reset. And in this case, on only a very small scale.
All right, so what do you mean by that, small scale?
Well, I knew the stock hadn't bottomed yet, but the entire nature of a bottom is that they're unpredictable. You know, a stock is constantly trying to bottom in a bear market, and it may experience several rallies along the way. And these are all traps.
I see.
And in this case, back on May 24th, I wrote, at less than $14 per share, Smith & Wesson trades for less than 4 times this year's expected earnings. This is a very cheap stock. In fact, I went one step further. By analyzing the technical indicators, I noticed what's called positive divergence. And I wrote, this is often an early warning sign of a potential change in trend from bearish to bullish.
Okay, so you recommended at that time a penny option.
I did. And it was a penny option because the stock was cheap and the option itself traded for literally just pennies, about 60 cents. And sure enough, the stock reversed course and saw a nice little 8% pop. Now, that's not a reset in the classic sense, and certainly not enough to convince you to back up the truck on shares, which I think would have been risky.
Yeah.
But by using the penny option that I recommended, you could have made a 106% gain in just 24 hours without touching a single share of the stock. Now, meanwhile, the stock went on to continue falling that year.
Double your money in 1 day. So the lesson here, I guess, is that even if you think a reset is happening, it could be just a temporary blip, this bear trap.
Exactly. Stocks experience a series of false resets, you know, all the way until they finally hit a bottom, a real bottom. And to shareholders, that's a huge trap.
Yeah.
But by using our options technique, you can make money on every single one of those moves without touching a single share along the way. And that's how last year alone, I booked gains of 100% in 14 days on SoFi Technologies, 173% in 48 hours on PayPal, 150% in 22 days on Wheaton Precious Metals, 167% in 19 days on the Tecurium Soybean Fund. Soybeans.
Wait a minute, you got to be kidding! Soybean?
Yeah,
A soybean
you
fund.
well, that's it. That's my point. You can spot these opportunities in literally any sector, Chris. And frankly, I don't know the first thing about soybeans. I mean, I don't know about e-commerce platforms or most of the other companies that we played last year. For me, it's all about using my technique to spot these reset moments wherever they happen to appear in bull or bear markets. And keep in mind, if you can double your money over and over again during these little false resets,
Right.
then just imagine how much you can make when the entire market resets for real.
Yeah. Well, you obviously certainly got it right last year because you booked, we said it earlier, 14 different gains of 100% or more. But what about the other major resets of the past 2 decades? Has this penny option technique held up over time?
Well, we already covered the reset following the dot-com crash. 4 different 10-baggers among a variety of other double and triple-digit gains. And we've talked about the reset following the 2008 crash, which was also a fantastic environment for us.
Yeah.
I mean, take a look. One of my favorites was Palomar Medical Technologies, which experienced a false reset in the summer of 2008, when the worst of the crash hadn't even happened yet.
So you mean it shot up for essentially, I guess, no reason in the middle of a 57% market collapse?
Yeah, talk about a trap. I mean, but we didn't touch the stock. Instead, I applied my technique, recommended a penny option on July 21st, and we booked a 490% gain in just 25 days.
Wow.
And I'll tell you this, there weren't that many people making 5 times their money back in 2008.
Yeah, you're right about that.
And frankly, that's why I laugh when people say that options are risky. Anyone who's been through a major crash and thinks stocks are conservative, that's crazy in my opinion.
Yeah, and you booked what, 22 different gains of 100% or more following the coronavirus crash.
Right, so we know this technique works in exactly the kind of environment that we're facing today, choppy and uncertain. Mm-hmm. But here's the thing, Chris, and it brings me to the second main benefit of using options, which is going to be really, really important for 2023. When these historic resets do finally occur, they're never smooth.
Smooth, meaning nothing ever goes straight up.
Exactly.
Right.
And my point is, that's true of both individual stocks and it's true of the broad stock market. And that's what makes these reset moments even harder to spot, and they can be so costly for the folks who get in too early. But for us, it's just another opportunity.
How so?
Well, take 2005, for instance. By that point, the market had been creeping back upward for years following the dot-com crash. Most people were feeling a lot better about stocks.
Uh-oh. I think I know where this is going.
Well, even if you'd known the market had reset in 2003 and you were feeling great about the prospects of our economy and the market, it wasn't a smooth ride back up, and it never is.
True.
Using the broad market as your barometer for every single company would have been a mistake. And it always is. The fact is, we saw lots of corrections during that bull market, which translated into some truly amazing opportunities among individual stocks, like Strayer Education.
Right. Strayer, which was the online university.
Yeah, you might remember all the commercials that were all over TV
Right.
back then.
Yep.
Okay? Strayer had recovered really, really nicely from the dot-com bottom. I mean, it almost doubled by the time it caught my eye on May 2nd of 2005. But when I applied my technique, I noticed something a little bit surprising, and you can probably guess.
Well, you thought the stock was about to go down.
That's right. Smack in the middle of that beautiful reset that it had made, for a while it looked as though Strayer was going to make shareholders rich. But I disagreed. I mean, I knew it was headed south, and I recommended an option to take advantage of precisely that move. And sure enough, the stock dipped, and we booked a 1,285% gain in just 2 days.
Holy moly.
Right? So to put that in perspective, Chris, it turns every $5,000 into $64,250 in just 48 hours. And it's literally 10 times more money than you'd have made over the previous 2 years as a shareholder, even if you bought the stock at the absolute bottom. See, and that's why I want to emphasize, you don't need to actually spot the exact bottom for a chance to make serious gains on the reset that I'm predicting in 2023. So if you're waiting around this year, trying to nail the exact day, you're going to have a lot of missed opportunities. And as we'll cover in a moment, you might miss it completely because I'm thinking the historic reset of 2023 isn't going to look like any reset that we've seen in recent memory.
So just to be clear here, what we're saying is that you can make money with this technique even when stocks go down.
Yes, and it is probably my favorite reason for using options, especially in this kind of volatile market. For example, I always love sharing my story about Martha Stewart. Right?
Yeah.
Now, people might remember she was sent to jail back in 2004 for charges that were related to insider trading.
Oh, Martha. Sad day for America, that was.
Well, when they finally let her out, it might have seemed like good news for her company, Martha Stewart Living.
Yeah.
But I'll tell you, when I applied my technique to the stock, I knew that sucker was headed in one direction, down.
So you recommended an option.
Sure did. And we booked a 343% gain in just 11 days, even as shareholders had been obliterated over the previous 4 years.
Yeah, and that reminds me of something I remember reading about you, Jeff. When you predicted the 2008 crash, you were looking forward to that. I think let's pull up the exact post here. Back on, there it is, January 13th of 2008, you wrote, "The bear is on the hunt, and I couldn't be happier."
Well, yeah. Well, can you blame me? I mean, you could have doubled your money 10 times on my recommendations that year as stocks reset from a bull market back into a bear market.
Yeah.
In fact, we were just talking about Citigroup, right?
Right.
Look at what happened to the stock that year.
Oh, yeah. That just absolutely brutal.
Brutal. The stock fell 88%. And to this day, it still hasn't recovered. And yet, just 9 days after I posted my 2008 prediction, we booked a 211% gain in 3 days on Citigroup. So if you have the right trading technique, then yeah, absolutely, a falling market can be fantastic news. In fact, I often see even more opportunities in that kind of environment because when a market resets into bear mode, those make some of the biggest and fastest moves.
It's very interesting. You said something similar back in, I think it was back in 2019, didn't you? You predicted a major sell-off was coming at that point. Said it would be like Christmas for traders.
Christmas for traders, yeah. And to be clear, I had no idea what was going to cause the crash. And I mean, it turned out to be COVID-19. I didn't know.
Right.
But that, of course, was a tragedy, and it wasn't good news for anybody. But nevertheless, those whipsaw moves during the COVID panic made for exactly the kind of reset that I look for. For example, the market began to reset in April of 2020. We booked a 127% gain in 8 days on the Financial Select Sector Fund, among dozens of other plays that we found that year. And speaking of Smith & Wesson, in fact, we applied our technique in 2020 as well. And at that time, we booked a 225% gain in 27 days.
Wow. I'm going to let you catch your breath for a minute. This is amazing. This technique of yours works whether stocks are going up or down. It works especially well during reset moments, whether it's in the market or even an individual stock. But tonight, you've been saying over and over now how this will be especially critically important for 2023. So with that, I think maybe the time has come to hear your big prediction. So bring all of this together for us, if you would, and explain what exactly is coming on May 1st.
Sure. Well, in short, I predict the market will bottom this year, but it's not going to look like a classic bottom. Instead, it's going to be a rolling bottom. And as I'll explain, you don't need to nail the exact date that it happens because rolling bottoms actually consist of a series of bottoms all on different dates. But I strongly urge you to move your money by May 1st. Get out of banks, get out of T-bills and most popular stocks, and instead put your cash into the vehicles that we've been talking about tonight.
Okay, so hold on a minute. Explain what you mean by all of that you just said. You're going to have to walk me through it.
Okay, well, this is why we've spent so much time tonight looking at classic market bottoms.
Right.
All of those resets back in 2003, 2009, 2020, again, those were classic bottoms marked by a moment of capitulation when everyone had essentially given up on stocks. There was a lot of emotional pain. Now, I don't think we're going to see anything quite like that in 2023. Instead, I'm thinking the market's going to bottom in stages, one sector or one company at a time. And in fact, it's already begun. I mean, look at Intel, for example.
Oh, gosh. That one's been a real stinker, hasn't it? I mean, a blue chip like that and such an experience, such a fall from grace.
Well, yeah, it's hard to believe, but Intel, once the leader of the U.S. semiconductor market, has crashed by 50% in a year. But here's the thing, Chris. At this point, things really can't get much worse for Intel. The CEO was invited to President Biden's State of the Union address, and the president promised a new era for American semiconductors. And still, the stock crashed. I mean, just look at some of the headlines surrounding Intel lately. Intel is dead. It just doesn't know it yet. Intel is dying, and we can't save it. Intel, you were warned. I mean, literally hundreds of doom and gloom headlines predicting the end of this multi-billion-dollar giant. Chris, that's what a moment of capitulation looks like. And that's when a stock bottoms because there's nobody left to sell.
Okay, I know I've asked you this before. How can you be so sure?
After posting a miserable year in 2022, Intel kicked off 2023 with a horrific earnings report. It was the kind of report that would normally send the stock down another 50%. But Chris, look what happened. It barely moved. And that's because Intel had already bottomed. Even though the broad market hadn't bottomed at all, the broad market was still bouncing all over the place.
Okay, so buy Intel?
Well, you can always buy a stock when it bottoms, sure, and you'll probably do fine over the long run. But instead, I recommended our trading technique. For example, Chris, you probably remember the event that we hosted together last fall in Las Vegas.
I do.
I pointed to Intel as a major opportunity. And if you'd have bought the stock, you'd be up about 20% by now. And that's not bad. But by using the options play that I recommended instead, you'd be up more than 2 times more money by now on the same company without the risk of owning a single share. And consider this. I mean, we can go back a little bit further. After the 2008 crash, Intel had fallen by 51%. It bottomed on March 1st, 2009. That's when the stock reset. And over the next 3 years, you'd have doubled your money if you'd bought shares. That's not bad.
Right.
But instead, I waited very patiently, and on August 31st, 2010, smack in the middle of that reset, I analyzed Intel and recommended what's known as a call option.
A call option. So can you explain what that is?
Sure, it's very simple. A call option makes money when something goes up. Furthermore, it was a penny option, just 40 cents when I found it. And again, that means it's a cheap option on a cheap stock, which are incredibly rare to spot. And sure enough, the stock continued going up, and we booked a 100% gain in just 7 days on Intel. In other words, we booked the same gain as stockholders, but in 1 week rather than waiting 3 years, and without the risk of owning a single share.
Got it. So your big recommendation for 2023 is to apply your penny option technique on stocks that are on the verge of a major reset, even if the market itself hasn't yet experienced a classic bottom. That's
Exactly. And that's because in 2023, I predict that not every stock is going to bottom at the same time. The moment of capitulation is going to arrive at wildly different moments for different stocks. In the case of 2008, as you saw, Intel bottomed pretty close to where the broad market bottomed. But in 2023, I predict stocks will bottom all over the place, over the span of months and months, which will make the overall bottom for the broad stock market even harder to spot and take advantage of. In other words, waiting around for a big turning point is the wrong way to go, because even the greatest rally can be a trap, and every correction can always get worse. Instead, find the bottom in individual stocks and in individual sectors.
As an example that you can share?
Well, how about Bitcoin? Has it officially bottomed yet? Well, someone certainly hit the reset button, haven't they?
Yeah.
It crashed by 60%. But rather than cross my fingers and buy Bitcoin right now, hoping that it's going to embark on a runaway rally, last year I applied my technique to the ProShares Bitcoin ETF and took advantage of a short move up in the stock on March 18th. And we booked a 145% gain in just 10 days on a penny call option, without having to gamble on whether the overall Bitcoin market had bottomed at all.
Right. So just to be clear here, in 2023, Jeff Clark predicts that instead of one big moment of capitulation for the market as a whole, we're going to experience that reset moment for a whole variety of individual stocks and sectors instead at different times. And that is where your technique comes in. It's ideal.
Right. And many stocks already saw a vicious bottom back in 2022, long before the market sell-off was over. Like Netflix, for instance.
Oh, yeah. Gosh, that was hard to watch. Didn't Bill Ackman lost something like, $400 million
$400
on
million.
Netflix last year?
He did. But in fact, a lot of people were saying it was the end of Netflix. And for the first time ever, they actually reported a loss in net subscribers. And back then, Forbes reported in August, Netflix is now the worst performing stock in the S&P 500 as shares plunge over 60% in 2022. Chris, that's what a bottom feels like. But we haven't seen that kind of doom for a whole variety of stocks, which means that we're going to experience more of what I call a rolling bottom rather than a one fixed single day bottom.
All right, got it. So we shouldn't expect a Black Monday event this year. That's what we're saying.
No, and last year we saw a rolling crash. Where not everything fell at the same time. And this year we're going to see a rolling bottom. And mark my words, if you know what to do, it's an opportunity to double your money over and over again as it all unfolds, as we've shown many times before. For example, take another look at Netflix.
Okay, and this is going back, 2 decades?
2 decades.
Okay.
Now, Netflix is one of my favorite stocks to keep an eye on because it's kind of a bellwether for the economy. So I've always kept the stock on my radar, going all the way back to when I was running my $200 million money management firm. And back then, Netflix fell by 82% during the dot-com crash. But watch this. The market saw a classic reset, right? And we talked about that earlier. So not surprisingly, Netflix reset around the same time as the broad market. And in fact, if you'd bought it the day the broad market bottomed, you would have made 4 times your money over the next year. That's a fantastic gain for sure, if you'd been lucky enough to know the exact date of the market bottom.
Right, which you say it's impossible to do.
Impossible.
Okay.
And I don't care who you are, nobody ever nails the exact bottom of every market sell-off over and over again with perfect consistency.
Sure.
You know, Warren Buffett can't do it, I can't do it. I don't know, Chris, you probably can't do it either.
So you're admitting you missed the bottom on Netflix?
Yeah, I sure did. But guess what? It didn't matter. You know, instead, I waited very patiently, applied my technique, and on July 2nd, 2004, smack in the middle of Netflix resetting back into a bull market, I determined it was about to go down. It had just staged a nice recovery, yes?
Right.
But remember, nothing's ever a smooth ride. So I recommended what's known as a put option.
Okay, we talked about call option before. What's a put option?
It's very simple. A put option makes money when something goes down. And sure enough, we nailed it. I mean, Netflix plummeted 25% over the next month, and we booked a 1,007% gain in just 42 days. And that's because I didn't try to worry about timing the exact bottom. I just looked for a turning point within what was already a massive reset.
That's amazing. So the takeaway here is that there's no point in looking for the exact bottom of the broad market this year in 2023. Just look for the biggest turning points in all of the various stocks along the way. And that goes whether they're up or down.
Correct.
Okay.
And that's because nothing ever bottoms at the exact moment after any sell-off. I mean, but in 2023 especially, it's going to happen over a longer time span than maybe we've ever seen before. And not just for individual stocks, but I think for the entire sectors too.
Right. Well, I know your free recommendation is still to come, but can you name for us right now one of those sectors at this point?
Yeah, probably my favorite, gold. You know, after falling 30% over the past couple of years, it reset in 2022,
Okay.
even as the broad market was still selling off. By applying my technique to gold bullion, I saw it coming as early as July 27th. And I wrote, the gold sector is setting up for a massive rally.
Okay, I'm sorry, wait a second. How could you be so confident of that?
Well, look what else I posted that day, Chris. The gold sector has been a miserable place to be for the past 3 months. Gold investors are depressed. Financial TV talking heads are bearish. And almost nobody on Wall Street wants anything to do with gold. This remarkable shift in sentiment is just one of the reasons the gold sector is setting up for a rally. The best time to sell gold stocks is when everyone else loves them. And the best time to buy is when everyone hates gold.
It's so interesting. And I guess that goes back to something you said earlier too, which is why you turned down that interview on CNBC back in 2009. The masses almost always get it wrong on the biggest turning points.
They sure do, and especially when it comes to gold.
Yeah.
And my technique is designed to take advantage of that by doing the exact opposite of everyone else. And in this case, I kind of knew that gold was about to reset because the moment of capitulation was everywhere. I mean, it had bottomed. So that same day, I found a penny option on the Van Eck Gold Miners Fund in my other work, and we booked an 89% gain in 12 days. Followed soon after by another 89% gain on the same stock, as ever, without the risk of owning a single share. And those gains were actually on the smaller side, Chris.
89%. You call that small?
Well, take a look. During a similar reset in 2019, we booked a 269% gain in 18 days on the exact same stock. That's triple your money in under 3 weeks. And during a similar reset in 2021, we booked a 245% gain in 38 days, again on that same stock, all without touching a single share.
Yeah, so it does make 89% seem small, but why not just buy bullion?
Well, for some people that's fine, but for me, it's too much work.
Yeah.
You know, instead, I continued looking for gold penny options. And for example, last year, I booked a 150% gain in 8 days on that same stock again, the Van Eck Gold Miners Fund, without touching bullion, gold coins, or even a single share of this fund.
Okay, fair enough. I understand that. Gold's only up about, what, 25% since the bottom last year?
Yeah, 25%. And that's why I love gold, because it tends to reset a lot more often than the broad stock market. Opening up really nice trading opportunities with far greater and faster potential than owning gold bullion or gold stocks.
How does that work? What do you mean by that?
Well, gold often switches back and forth between bull and bear mode, regardless of what's happening to the broad stock market. For example, after plummeting 20% after the COVID panic, gold staged a bizarre reset in 2021, rising into a bull market and then immediately falling back into a bear market all within about 12 months. Now, we saw it coming, and we booked a 138% gain in 9 days on my favorite gold stock, that VanEck Gold Miners ETF, along with a 183% gain in 17 days on, once again, the VanEck Gold Miners ETF. A 104% gain in 13 days for a third time on the VanEck Gold Miner ETF, along with that 245% gain in 38 days that I mentioned earlier. Plus, on top of all of this, we had a 153% gain in 31 days on Agnico Eagle Mines, a 225% gain in 36 days on Wheaton Precious Metals, and just a whole lot more all across my work. And all of that happened in 2021.
Amazing. So you often target the same stocks over and over again, clearly. Why is that?
Well, I do, yeah, and that's because it's the perfect penny option can be really hard to find. But where it appears once, it tends to appear again and again. In gold, for example, we've booked something like 30 gains of 100% or more across all of my work on that Gold Miners ETF that I keep talking about. Take a look.
Yeah. Now, all those gains, all on the same stock, that's absolutely amazing. So now I understand why Douglas Kay once wrote to you that Jeff's insight is almost clairvoyant. So hold on, let me ask you this. Would you say that gold, I hope I'm not, don't go out on a limb here, but would you say that gold is the best way to play a rolling bottom this year?
Well, it's one of them. Because look at gold over the past 20 years. You see how many times that it's bottomed and reset?
Yeah.
And for every single one of those turning points and the whipsaw moves along the way, there was a perfect penny option. For example, when gold reset into a historic bull market beginning back in 2000, I applied my technique to it every month through the reset in 2016. Take a look. Here's a snapshot of the gains that we booked. You could have doubled your money or better 19 different times.
Mm-hmm. Now, it looks like gold took a really nasty dive around 2011. Am I right?
Yeah, and I was so excited. I stepped forward in public for the first time ever to share my gold penny option technique. And remember, you can make money on stocks whether they reset into a bull market or a bear market.
Right.
And in this case, back on August 18th, 2011, I wrote, gold could be headed for a nasty correction. And I was so excited about that. And until that moment, I had never appeared in a presentation like I'm doing right now.
Is that right?
And I was always something of a recluse in the industry. But when gold reset in 2011, I urged the public to apply this technique to gold without ever buying bullion, coins, or any gold stocks. And sure enough, you could have made gains of 103% in 22 days, 100% in 8 days, 267% in 8 days, 100% in 22 days, and more, all on my gold recommendations that year alone.
It's absolutely amazing. You know what? It's kind of strange to me how gold didn't take off during the COVID scare. You'd think that everyone would have flocked to gold as a safe haven of sorts.
Well, actually, that didn't surprise me at all. In fact, back on May 21st, 2020, I applied my technique to gold, and here's what I wrote. This sort of negative divergence is often an early warning sign. I'm expecting a sharp, quick decline.
Now, I got to hand it to you because that strikes me as being a pretty bold prediction to make at that point in time.
Well, yeah, it's definitely bold to make that sort of comment about gold. But as gold reset and it fell, we booked an 85% gain in 19 days on the VanEck Gold Miners ETF. And that was on the smaller side. During a similar reset back in 2019, as gold fell, we booked a 158% gain in 9 days on that exact same stock. And in 2021, as gold dipped, we booked a 100% gain in 63 days, again on that exact same stock.
Gosh. Well, now I can see. I'm beginning to understand why these big turning points in the market are like Christmas
for
traders out
right.
there. And you're saying gold is just one of, 24 different sectors that you tend to follow?
Yeah,
right?
Maybe 24 or so. It's all about spotting those reset moments in any sector, right? Whether it's technology or retail or entertainment, blockchain, social media, you name it. That's why so far this year, I'm seeing opportunities that are literally among the best that I've found in my 40-year career. And take a look. In the span of just 48 hours back in February of this year, you could have more than doubled your money 3 different times on 3 different stocks with the penny options that I recommended.
Man, am I seeing Walgreens in there? You got to be kidding.
Yeah, and that's another big takeaway. Many of these opportunities aren't exactly what you would call sexy, right? Nobody ever tells you to buy Walgreens at a cocktail party,
That's right?
Yeah. You end up drinking alone. But we applied our technique to this stock back on January 31st. and determined that it was about to reset into a bull market. And the perfect penny option appeared, an option that I might normally spend 10 years looking for on Walgreens and never find it. So we recommended it, and sure enough, you could have made 101% gain in just 72 hours.
Right. That's amazing. And that was during such a time of enormous uncertainty.
Yeah,
right?
and that same day, the exact same day, January 31st, most people were holding their breath over the Fed's latest announcement. And everyone was so worried about interest rates, and they sat on the sidelines.
Yeah.
But not us. I mean, because I already knew that we were facing a rolling bottom. And whatever the Fed might or might not do next, and however the broad market might or might not react, Walgreens had already bottomed. And that's all I needed to see. You know, this is also how we booked a 115% gain in less than 2 weeks on designer brands that same day. And that's another unsexy stock that we caught during a nice reset.
Something to bookend with Walgreens. Now, let me ask you this. What is the significance of May 1st? Why choose that date? You said we need to move our money immediately to take advantage of the reset.
Well, Chris, the rolling bottom is already going,
Yeah.
right? And it's only going to accelerate from here. I mean, remember, some of the biggest gains happen immediately after a sell-off. And in the second half of this year, I suspect we're going to see even more stocks bottom because that's what stocks tend to do after May 1st. I mean, you've heard the old expression, right, Chris? Sell in May and go away.
Oh, yeah. Stocks historically, I know, do underperform in the 6-month period, well, after May 1st.
Yes, which means that I suspect more and more stocks are going to begin resetting starting around May 1st during that historically volatile time. And that means the sooner you get positioned for this technique, the more money you can make. And not just the chance to double your money, but potentially triple or quadruple your money in days at a time, as we saw with Citigroup last July. Imagine seeing that Citigroup setup on dozens of other stocks beginning May 1st, and you'll see why I think that 2023 is going to be a fantastic year for traders.
Yeah. If you don't mind me asking, Jeff, let me cut to the chase here just a bit. Which penny options should I be buying right now?
Well, I have a constantly updated model portfolio showing which penny options we recommend that you buy immediately. And to help you get started, I've written a research report detailing exactly how our technique works. It's called Spotting the Perfect Trade, How to Make Thousands of Dollars a Week with Options. And inside, you'll learn an overview of how my technique works, including technical tricks to seeing exactly when the masses are wrong, how to use that information to see which stocks are on the verge of going up or down, and the all-important secret of how to pick the right option at the right time at the right price, the most valuable skill that I can teach anyone. I've taught my own 2 sons how to do this.
Right. And I know there are thousands of folks out there watching right now today who are very excited to access your new report. But realistically, a report alone is obviously not enough to get started.
Well, a report is a great way to learn. But I agree, you know, to wake up at 4 a.m. every day the markets are open as I do and apply this technique to more than 4,000 companies and know exactly how to value each option. I mean, that's impossible for most people.
Sure.
It took me decades to learn, and that's why for about 20 years now, I've created a shortcut to doing this. You see, back in my early 40s, I closed down my $200 million firm. And by that point, I'd have made enough money trading options that I wanted to spend more time with my family. But I couldn't say goodbye to options.
Really? Why not? Man, I'd go lay on the beach after a career like that, Jeff.
Well, you have to understand, trading is it's kind of an addiction. You know, once you figure out how to make good money, you're hooked.
Yeah.
I mean, I didn't want to work 16-hour days anymore on the trading floor, managing money for other people, but I still wanted to be involved in the market. So I thought, why not share this thing online?
Online, like Twitter or something?
Well, this was long before Twitter. You know, instead, I worked out a deal with a publisher on the East Coast, and I launched my own trading research service called the Delta Report, where I began sharing my best options recommendations over email. So once a week, I apply my technique to the market, and I email my favorite options recommendation to anyone who's interested.
Yeah, I understand you've gotten some pretty funny feedback too before.
Yeah, you know, I once heard from a woman who was so thankful for one of my trade recommendations that she invited me to her home in Texas for a steak dinner.
Well, why do you call it the Delta Report? How did you get the name?
Well, Delta is the name for how quickly things can change in the market. And as you've seen today, when things change in the market, even by just a small percentage, that spells opportunity.
Gotcha. So the Delta Report is basically called a shortcut for anybody who wants to learn how to make money with your options technique without having to do all of that technical analysis that you spend so much time doing at your home in California.
Yeah, that's right. And now that I'm done managing money, you know, once a week, I share my favorite option play with anyone who's interested.
Yeah.
And again, there's no experience necessary. But I will say that folks who do best have already been around the block with ordinary investing. And they're, frankly, just maybe sick and tired of that and ready for something new. Or maybe they just want a chance to make a lot more money faster.
Right. Well, I know I'm interested in that. And in just a moment, we're going to hold a demonstration of Jeff's trading technique, which he's agreed to share here free of charge. And it includes his free recommendation of a penny option that he recommends that you buy immediately. Today, we're also going to be joined by a very special guest during our Q&A session coming up. That's going to be best-selling author and former global investment banker, Dr. Nomi Prins. Nomi is going to share her thoughts on Jeff's prediction of this rolling bottom that he foresees coming up in 2023. In our Q&A, Jeff is also going to name which sectors, aside from gold, we already covered that he believes are on the verge of a massive reset this year, which means a lot of opportunity out there, plus the name of a stock with big potential upside and which stock to avoid. But first, I want to make something very clear. For over 2 decades now, Jeff only shared his options plays with about 100 clients at his private money management firm. This was in San Francisco years ago, and he hand-selected these people from some of the wealthiest VPs, CEOs, and entrepreneurs in Silicon Valley. Every client was a millionaire, and he generated them millions of dollars more in profit. The account minimum, as I understand, was $250,000. It was $250,000. He also collected a standard 2% fee. So, in other words, for decades, you'd have never been able to access Jeff's work. At least I wouldn't have. Jeff was off limits to all but the wealthiest executives out there, which means if you'd been a vice president at Chevron, like one of his clients, or you had a $20 million or even a $30 million account, as some clients did, you'd have paid a fortune for his services. But today, Jeff is opening the doors to a powerful way for you to access his daily market analysis and all of his top recommendations yourself to see which stocks are on the verge of moving up or down in 24 different sectors. Each week, Jeff is going to recommend a new options play with the potential to double or triple your money as the result of his technical and fundamental analysis. And he will walk you through exactly how to buy it, what the potential upside is, and why. As one of Jeff's wealthy former clients said, no matter whether the market is moving up or down, Jeff Clark somehow manages to find a strategy that works. Overall, I could not be happier with his performance. So, as you can imagine, this research is not cheap. However, today, we're inviting you to become a new member of the Delta Report through a very special offer that we urge you to take advantage of. As one subscriber from across Jeff's suite of research, Brad Kay, once wrote, "Another blowout week. Jeff, you nailed it again. I have $65,000 in realized gains this week." 1 full year of the Delta Report normally costs $5,000. And frankly, it's a bargain at that price. Again, you could have doubled your money 125 different times since Jeff first joined our industry, 14 times last year alone. But today, because Jeff is predicting a historic reset, and because all of the uncertainty being fueled by bank runs, and because he's always preferred to share his work beyond the institutional world to everyday folks who want to learn how to make more money, and because the market has been a mess with most people missing the rallies this year and terrified of another prolonged downturn, and because of Jeff's technique and how it's perfectly suited to play this kind of market when a reset opens the most lucrative trading opportunities, Jeff and his publisher are willing to make you a special offer. If you get in right now today, they will knock 50% off the price. Now that means that you can become a member of the best-selling and long-running Delta Report today for just $2,500. It is an offer that expires very soon. And even better, you'll also receive a free second year. That means you can receive 2 full years of the Delta Report for half the price of one. But again, if you get in right now before the offer expires. In fact, we're actually going to go one step further than that. Because you took the time to tune in, if you get in right now, you're also going to get an extra $500 off as just a welcome discount. So in other words, you can receive 2 full years of the Delta Report for even less than half the price of one, the absolute best offer. And to get started, All you've got to do is click the button on your screen right now and place your order. And I don't want you to worry because a separate window is going to open up so that you can continue to follow along as tonight's event continues. And I think you'll find your subscription can pay for itself very, very quickly. As subscriber John M. wrote, I shelled out $2,500 to join the Delta Report, and in less than 1 week, I am up over $3,600 after 4 trades. If my math is correct, that is over $1,100 profit after I paid off my subscription. You passed the test, Jeff? Let's go. And keep in mind, we haven't even gotten to the best parts of this offer yet, because when you join the Delta Report tonight, you're also going to receive a set of incredibly valuable bonuses, beginning with one particular bonus that could help you make even more money with your subscription on a daily basis. It's a chance to look over Jeff's shoulder throughout the day. Jeff, can we talk about that for just a moment?
Well, yeah, it's simple. Through today's special offer, we'll also give you free access to a special feature called Delta Direct. Now, normally, we might charge $2,000 a year to access Delta Direct. It's a private website where I post real-time commentary on the market on literally an hour-to-hour basis, along with real-time recommendations based on current action. I post predictions for exactly where the stock market is going next every single day the market is open, including a detailed explanation of why. I'll look at individual sectors, breaking news, anything I think will move the markets and create trading opportunities. For example, last year on May 19th at exactly 9:08 a.m., I posted the S&P 500 traded down to 38.76 this morning, an extremely oversold condition. Let's buy a speculative call option on the financial sector, XLF. Financial stocks have been crushed, along with everything else in the broad stock market. When we finally get to an oversold bounce in the market, I expect the financial sector to lead the way higher. I expect this to be a quick trade lasting about 1 week or so.
All right, so I'd like to know how it worked out.
Well, you could have just about doubled your money in under a week. We had an 84% gain in 6 days. And in fact, that's one of our favorite stocks in Delta Direct. You know, after a similar play on XLF, I once heard from a subscriber who'd lost money in the stock market, tried my technique, and wrote, Jeff, I closed out my position on XLF today as you recommended. This trade brought my trading account back to where it was before the crash. It also made up for some of the mistakes that I was making before reviewing your lessons.
Love it. Absolutely love it. So you're not just providing real-time commentary here, you're even posting actual time-sensitive recommendations in Delta Direct.
Right. And that's because the options market moves quickly. You know, sometimes the best trading opportunities are something that I might spot out of the corner of my eye at 1 o'clock in the afternoon. And the setup is gone just an hour or two later. So rather than wait for next week to email you a new recommendation, I'll fire off the details in real time on Delta Direct. It's essentially a direct line from my computer to yours. For example, one stock we love to target in Delta Direct is SPY, which tracks the S&P. And we often book those gains extremely quickly. I mean, remember, these are just very quick little profit opportunities. Take a look.
Oh, wow. I bet your readers love that, booking double-digit gains over and over again like that on top of your regular recommendations. That's amazing.
It's the most popular feature of our research. So if you love trading and you're looking for even more opportunities outside of my weekly recommendations, I urge you to keep my Delta Direct open on your computer or your smartphone throughout the whole day. You know, for example, remember the Walgreens example we talked about?
Right. You, what was it? You booked a 101% gain in 3 days back in February?
Exactly. Well, last year, smack in the middle of a sell-off, I applied my technique to Walgreens yet again. And I remember distinctly, it was April 5th, and the perfect penny option appeared at exactly the right time, at just 69 cents. So that morning at 7:35 a.m., my wife and I had just finished breakfast. I predicted Walgreens was about to reset from the nasty fall it had taken with broad market. And I wrote, Walgreens has been selling off for the past 3 sessions. The decline now appears to be excessive. The stock is trading historically far away from its 50-day moving average line. The proverbial rubber band is now quite stretched to the downside, and the stock could start a snapback bounce at any moment. This looks like a good setup for a call option trade.
So that's the message you sent out over breakfast on Delta Direct, and you knew this opportunity couldn't wait for your regular release.
No, it was things were moving too quickly.
Right.
And sure enough, if you'd seen my post on Delta Direct early that morning and gotten in, even if it meant pulling your car off to the side of the road, you know, you don't want to get hurt during your morning commute, right?
That's right.
I mean, you could have doubled your money in about 24 hours.
Well, speaking of pulling your car on the side of the road or the highway, we just heard from subscriber Jeff M. recently, too, who says, I got your trading alert in the middle of a lake while kayaking with my son, was taking a picture of him and saw the notice and executed the trade in a couple of minutes. You gotta love the mobile app and a brokerage account on a smartphone. Thank you. How about that?
Well, I mean, I love that. I mean, trading and kayaking, why not?
Yeah, it works. Absolutely. So Delta Direct also, I assume then, would be where you post some of your biggest predictions as well, right?
Well, yeah, and that's because some of the best predictions happen in the heat of the moment.
Sure.
You know, a surprising job reports release or an unexpected announcement from the Fed, reports of a deadly new virus. You know, in fact, all of my predictions that you posted earlier about the coronavirus crash, those were things that I published in Delta Direct as the devastation was unfolding. And during a time like that, when the markets become national news and people are panicking, I'll often post 4 or 5 or maybe even 6 times a day, sometimes before the markets are even open or maybe even long after they close. For example, here's that post you cited earlier from February 27th. At the time, the worst day in the history of the markets.
Yeah, you were up early that morning.
Yeah, and one look at the futures and I knew things were going to get ugly. Then, as the market continued selling off, here's another post I made on Delta Direct on March 12th at 10:24 a.m.
10:24, you wrote, or you posted, stocks are now at oversold levels we have not seen ever before, so we're seeing something that hasn't ever happened, at least not in my lifetime. So wow, your readers, they got to find that sort of reassuring to know that they've got that kind of real-time direct connection to you during such a terrible moment like that.
Well, more importantly, I post exactly where to move your money. You know, for example, just 6 days after that post, we booked a 25% gain on the ProShares Treasury Fund. And of course, that was on top of the gains that we were booking with our regular weekly Delta Report recommendations.
Right. That's incredible. So there you have it. You can use the recommendations that Jeff is going to publish each week in the Delta Report. And you can also get into his real-time intraday Delta Direct plays for the chance to make even more money between his weekly alerts. I mean, you order now before today's offer expires, and you receive free access to Delta Direct. So you can follow right along with Jeff's analysis of the market every day that the markets are open. And of course, you'll also receive 50% off the Delta Report, along with a free second year and an extra $500 off if you get in tonight. And a whole suite of other bonuses, of course, that we haven't even covered yet, one of which could be an entire product of its own valued at $2,000 a year. But today's offer, the best offer with all of the bonuses, does expire very soon. So if you're interested, hey, I urge you to place your order right now. Click that button on your screen and you can get started right now. And I think you will find this offer well worth your time and expense. For example, subscriber Richard R. paid for his subscription more than twice over on Jeff's Citigroup trade. And with that, let me grab my trusty iPad here. It's always sitting down here, and I'm glad I didn't knock it off on the floor. We're going to start our Q&A here, Jeff, at this point, and I want to kick things off with our very special guest, who is Dr. Nomi Prins. I mentioned this earlier. Nomi is a former global investment banker who has worked at Goldman Sachs, Bear Stearns, Lehman Brothers, Chase Manhattan. She's known, of course, for addressing the Federal Reserve and the IMF, and for also predicting the 2008 crash in one of her many best-selling financial exposés. Nomi actually makes regular television appearances on BBC, CNN, CNBC, MSNBC, C-SPAN, Fox, and PBS. And her thoughts are on the market, have also been featured in the New York Times, Forbes, Fortune, Newsday, The Guardian, The Nation, New York Daily News, La Vanguardia, and Salon.com, among others. So we are honored to have her zooming in today from her office to get her insights on where she thinks the market is going next this year. Nomi, are you with us?
Yes. Hello. How are you?
Nomi, I think you know Jeff Clark. He's here and is predicting what he's calling a rolling bottom for the market this coming year. In other words, he thinks that we're going to see a bottom, but it's not going to be a classic moment of capitulation, as he calls it. He believes that individual stocks and sectors will bottom at wildly different times than the broad market. And I'm curious to know, do you have any thoughts on that?
Yeah, I absolutely agree with that. Even before we've seen the more recent volatility in the banking sector, we've seen this possibility of what I call mini crises, which kind of correspond to mini bottoms in certain sectors or certain names. Because there is a lot of uncertainty in the market. And that's how that manifests. There's still uncertainty about what the Fed's going to ultimately do and when it's going to do it. There's uncertainty about the financial sector and how that's going to relate to credit flowing into the other sectors. And of course, the market picks up on all of that and more. And so what you get as a result, I absolutely agree with Jeff, is these little periods of mini crises, which again connect into individual bottoms for certain sectors and for certain individual stocks, which is why it's very important to have a metric, a rubric around those.
Right. Now, overall, would you say that this market or this environment that we're in right now, do you think this is a good environment for buying and holding stocks? Or would you recommend actively trading the market instead?
I think this is the perfect environment for honestly doing both, and here's why. There is a good set of individual stocks that have reached or are nearing their bottom. And with stocks, it's really difficult to time the exact bottom, but you look for names that are predictably going to be higher in the future. And as these ultimately all these bottoms sort of play out, and as the Fed ultimately pivots back to neutrality and then towards reducing rates at some point in the not too distant future. So on that hand, it's good to hold stocks and to be selective. But on the other hand, it's also a very good time to play the volatility that comes into effect during these periods of interim uncertainty and during these mini crisis periods, and where individual stocks are looking for potential bottoms, because you can get much more upside in terms of what you could do with selecting options and be more targeted on specific names and with the appropriate strategy for those names in those sectors. So that's the thing. It's a good environment for doing both, but either way, it's an environment to be very targeted with the individual option strategy or with the selection for the buy and hold strategy.
Right. Nomi, as you know, what the stock market is doing and what the economy is doing are often two very different things. You've written extensively about that yourself. I'm curious, do you think this discrepancy between what stocks will do next and what the economy and inflation is going to do next, is that going to play a larger role than usual this year in markets as a whole?
Yeah, I absolutely do. When I wrote my book, Permanent Distortion, which basically talks about that very disconnect between how money gets fabricated and injected into the financial markets versus how it gets accumulated or sits around for longer terms in the real economy, that is completely disconnected. It's permanently distorted. It's permanently distorted because of how the Federal Reserve has so ineptly managed monetary policy. And the very interesting thing that we see this year and in a very, very current period is that the Fed has positioned itself as this inflation fighter, and as a result, it has raised rates more quickly than it has ever done in the past. And that's why we saw rates going from almost 0% about a year ago to closer to 5% in the front end of the curve basically now. And that's a very aggressive hiking pace, which they've done to save face from not having noticed inflation was happening at first, then noticing it after everybody else did, and then trying to do something about it with respect to rates. But the really key thing and why this environment is so important and so crucial right now is that what the Fed's doing since certain banks have basically collapsed, like Silicon Valley Bank, like Silvergate, like Signature, and potentially others, Credit Suisse in Europe. They've basically gone into secret stealth mode of quantitative easing, or effectively buying bonds. So as part of monetary policy, they raised rates to fight inflation. On the other hand, they were going to reduce the size of their book of assets. Well, they did, but they basically almost gone 50% back up from that. So they reduced it by $400 billion, and they added in $200 billion just in the last couple of weeks. And so that's going to continue. And what that means is that the market knows, even if this is not particularly noticed by the media or most investors, is that there is money that the Fed is now injecting back into the system, even while it says it is in tightening mode. And so as a result, there's a critical opportunity time now, before anyone else understands this, to get into the right names in the right sectors.
Wonderful. I love it. Nomi, thank you for sharing those valuable thoughts with us and for taking the time to join our event tonight. Very much appreciate it.
Absolutely. Thank you so much, Nomi. I know you're very busy, just back from a trip to Australia, as I understand. You didn't pick up the accent, so you must not have been there too long. So we'll let you go for now, but thanks for being with us.
Thank you so much.
Dr. Nomi Prince. So, Jeff, let me ask you an important question here.
Sure.
What if a new subscriber is unhappy in some way? Do you offer a refund? And let me give you an example. We've heard a lot from people, I'm sure you have too. I've always been scared of options. I'd like to try Jeff's technique, but if I decide this product isn't right for me, is there any way for me to get my money back? How would you respond?
Well, okay, we do offer a 100% customer satisfaction guarantee. Now, keep in mind, we can't offer a straight cash refund because too many people would sign up and grab a free copy of my report and the model portfolio and then cancel. And that's really not how our business model works. But
you want to keep your readers happy.
Well, of course. So here's our offer. If you sign up right now, before this offer expires, for the best possible deal on the Delta Report, look over our free masterclass, our research reports, and all of our recommended trades for the next 90 days. Frankly, we doubt you're going to ask for a refund because many folks make back the cost of their subscription on just a single trade. For example, we heard from Thomas M., who wrote, "Jeff, today I closed out the gold miners call option you recommended for a 150% gain in less than 3 weeks." But if you're not happy, simply contact our member services team within 90 days and you'll receive a full credit in the amount that you spend today to apply to any other trading product of your choice from our corporate publisher, Omnia Research. And that includes your choice of 8 other trading products, including a hugely popular new release called Currency Trader.
Right. And Jeff, speaking of doing right by your subscribers, I know you've worked hard to make sure that anyone can see the kind of gains that we've been talking about today, no matter what their background or education. Right?
Oh, absolutely. And I'll tell you right now, if you're willing to take just 15 minutes a week to use my technique and learn, you have what it takes to potentially make thousands of dollars each week. And you don't need to be good at math or good at finding patterns or anything other than someone who reads a simple email each week.
Yeah, and that's a very good point. For example, I saw a note from one subscriber who is a complete beginner who actually said, "I love the way that you're laying out things such as buy, sell instructions. They're not only clearly written, but informative enough for someone green at options to have an easy time learning. Placing options orders is only a matter of filling in a form just the way it's written out. Great job, Jeff Clark." And then Alan E. wrote this, "For me, the value is the way Jeff gives you a feel for the current pulse of the market. Great for timing the trades."
Right. I've heard from folks who've never done any trading at all,
Yeah.
and also from professional traders who just want specialized insight. This technique can work for anyone. But I will say this to you at home. I don't recommend you get started unless you have about $10,000 in capital set aside. Now, it's none of my business how much money my readers put into their positions or even if they choose to invest at all. But I have found that folks with at least $10,000 to work with, they tend to do best.
Okay, but to be clear, you can start out smaller than that if you wanted to.
Well, sure, you can start out with however small you want.
Right.
I mean, for example, I heard from a subscriber from another area of my research named Albert, who put just $100 into one of my recommendations. Why so little? I don't know, maybe that's all he could afford.
Yeah.
But he was very pleased to make a $241 profit on a trade that showed him a 150% gain. Now, of course, he could have made a lot more money by increasing his position size, but
Yeah.
but hey, whatever you're comfortable with. You know, I've just found that if you're not willing to use maybe $10,000 altogether, then chances are you're still maybe in the beginning stage of your life in the markets, and the Delta Report isn't suitable for you. And keep in mind, you'll have to make a few clicks online to set up your brokerage account for using options if it's not already set up that way. But it only takes a few minutes, and it's important, obviously. I mean, we'll show you exactly what to do.
Right, and in fact, that brings us to the next bonus that you're going to receive if you take advantage of this special offer today, right now. In short, Jeff has created a masterclass designed to show you how to get started with options immediately. And altogether, it consists of 8 different videos. Each one is brief, very easy to watch, and it explains step by step everything you need to know in order to follow his trading recommendation each week for the chance to make thousands of dollars a week. Now, normally Jeff's options trading masterclass might cost about $2,000 as a standalone product. And even at that price, it would be well worth it. As Rudiger W. just wrote, "Your education and recommendations are invaluable to a retired guy trying to generate increasing wealth in a volatile market." But my point is, through today's special offer, you're going to receive access free of charge. For example, suppose that you are completely new to trading options and you'd like a crash course on getting started. In that case, you watch video number 1. Or suppose that you already have some experience as a trader and you just want some specialized tips and insight on how to predict where the market is going next. In that case, you're going to watch video number 8. I got that right?
Yeah, but I should also say, you don't have to watch any of the videos if you don't want to. I mean, the most important thing is the email that I send out each week with my latest recommendation. I mean, hey, some people like to learn on the fly, like my son Grant, and that's perfectly fine too.
Yeah. Speaking of which, Jeff, remember you promised us an inside look at your trading technique today. You're going to give away one of your favorite setups right here and now, right? Are you still up for that?
Oh, absolutely. If you have pen and paper ready, just jot this down. It's just a really fun little shortcut to spotting the kind of quick profit opportunities that I've covered today. You see, when it comes to investing in stocks, the secret is to get it in ahead of everyone else, right? But with options, as you've seen today, it's a little bit different. More often, it's about doing the exact opposite of what the masses are doing. And over 40 years, I've developed or stumbled across literally dozens of tricks and secrets to do this. Most are a combination of fundamental and technical analysis, which means I evaluate the health of the company as a whole, as well as analyze the stock chart itself. And here's one of my favorite secrets, because it's one of the easiest. Now consider the Invesco QQQ Trust.
All right, so what is that exactly?
Well, it's just a way of investing in the NASDAQ, right? Now, look at this chart of the QQQ Trust back in February of 2020. And right up front, let me ask you, why do you think I'm choosing this particular time frame, Chris?
February 2020? Well, the whole market was going haywire, right?
Yeah, right. Nobody had any clue how the coronavirus would impact the market. The QQQ Trust had been going up for weeks. Even as news as the virus broke out, it still kept going up. Now, if you were a bad trader, the kind of person who loses money on options, you might have placed a trade based on a gut feeling that the QQQ would continue going up. And why not, right? I mean, this was right after 2019, the best year for stocks in 2 decades.
Yeah, but Jeff, if I know you would never recommend a trade just based on a gut feeling,
Well,
right?
no, of course not. Instead, I applied one of my favorite and simplest tricks and determined that, in fact, the QQQ Trust was about to reset. And take a look. Here's the chart 99% of people were looking at. Now watch this. One click, and I add something called the 50-day moving average.
Okay, you're going to have to explain what that is to me.
All right. It's simply a graph of the QQQ based on its average price over the previous 50 trading days. And here's something odd. The stock itself is nowhere near its 50-day moving average, right?
Right.
And that caught my attention for a simple reason. See, most things in life hover around a particular average. For example, suppose you run a marathon and it takes you 4 hours. And then 50 days later, you run another marathon. Your finishing time is probably going to be close to 4 hours, right? Mm-hmm. I mean, it's unlikely you'd have become such a better runner in only 50 days that you'd be able to cut your finish time in, half?
Yeah, over the course of years, maybe.
Right.
But
and if you run a marathon every year for 10 years, eventually your average will change considerably, sure.
Right.
But over 50 days, no, that's not going to happen. And in this case, that meant that I knew that the triple Q was flying in some pretty thin air. And it was near certain to return to its 50-day moving average at some point, which in this case meant it was headed in one direction, down.
So let me guess. You recommended a put option.
Sure did. And watch what happened next.
Nice. Wow, you nailed that one.
Yeah, the stock fell hard enough to literally smack right into that 50-day moving average line. But here's the great part. We didn't need to wait 50 days. I mean, we booked a 111% gain in just 19 days on that move, closing the position the very day the two lines intersected.
I love it. Absolutely love it. So there you go. If you're getting ready to place a trade, be sure to look at the 50-day moving average. I got that right, to get a feel for where the stock is going next.
Right, and you can do this very easily with online stock charts. Anytime a stock is stretched too far away from that 50-day moving average line, it's most likely to snap right back, either up to meet it or down to meet it. And you can place your trade accordingly.
Is this one of your longest running techniques?
Oh, absolutely. Going back literally years and decades. I'm making myself old here. For example, I used something similar to book a 300% gain in 14 days on Amazon back in 2004, a 138% gain in 24 hours on Countrywide back in 2005, a 128% gain in 17 days on Massey back in 2006, a 204% gain in 17 days on DR Horton back in 2007. And honestly, I can keep going. I mean, year by year, all the way up to 2023.
Yeah.
Take a look.
It's incredible. And that's through bull markets, bear markets, and everything in between. And you combine techniques as well.
Well, yeah, of course. I mean, a trader uses any and all indicators necessary to find the perfect setup. So, sure, I'll combine my 50-day technique with things like the 200-day moving average, or the MACD indicator, the relative strength index indicator, head and shoulders patterns, you name it. I mean, I always say a stock chart is a living and breathing entity. You know, the same way a doctor orders maybe a dozen tests to see what's going on with a patient, I apply every trick I can to confirm what my core technique is telling me.
All right. Well, I hope you copied that down, because Jeff's work has drawn some of the most impressive feedback that we have ever seen. Another viewer here, another subscriber, Wagner H, once said, "Wow, what a trade, 306% gain." John G wrote, "Without question, the best money-making advice I've ever had." And speaking of a choppy market, Andrew D once said, "I am proud to say that I handled the year of 2008 perfectly. Everything I've learned in the markets in my 3-year investing career, I'm 26, I put to use last year, and Jeff Clark both inspired me and guided me when I needed it." Jeff, let's get to the good stuff. Sure. Some free giveaways. If you're watching at home right now, I want you to go ahead, take out pen and paper, because we are about to get some really specific advice here with some actionable ideas. Jeff, which sectors do you predict are on the verge of resetting to the upside?
Okay, resetting to the upside. This is going to be a little convoluted, I guess maybe is the word for it.
Take your time.
But it may not feel right now, but I think the bank stocks are resetting. You know, we just had the run on all these banks. We've had several banks go under. Basically, you've got a situation where, you know, things hardly ever get as bad as they've gotten for the banks. So I think the banking and the financial sector, but this is important. It's not just the entire sector itself, because I think inside that sector, we talk about that rolling reset. Each individual bank is going to have its own little rolling bottom, if you will. Things like JP Morgan probably has a little bit further to fall, but other banks like maybe Citigroup, maybe that's already bottomed. I think there's a pretty good setup for that. So I like the banking sector. I like the gold sector, but gold, you know, what I say today, I might change my opinion on 30 days from now, because gold is back and forth all the time. So banks, gold, I think commercial real estate. That's different than the residential real estate, because I think residential real estate still has room to fall. But I think the commercial real estate sector is starting to heat up a little bit. Biotech hasn't done anything for almost a decade now. I think that's probably getting ready to reset in a bull run.
Okay, so that's 4 sectors you just mentioned: banks, gold, commercial real estate, and biotech?
Biotech.
Excellent. All right, well, thank you very much for that, Jeff. Now, I know you have charged as much as $2,500 for access to your stock research. I also know that your free options recommendation is still to come in just a few moments here. But for someone watching our event today, would you mind naming for us at least one stock, and I'm talking about an individual company, that you predict is on the verge of resetting to the upside?
Sure. We talked earlier about Walgreens being one of those unsexy names, but Walgreens happened to bottom shortly after we first traded it. I'm going to stick in that same category. I'll call it CVS. CVS Holdings. CVS is the ticker symbol for it, but that's another stock that I think has had a very, very tough year. But to me, it looks like, well, if we go back to, we were talking about the 50-day moving average line, if you were to map out a chart of CVS, you can see why I like it. It's trading historically far away from that. And CVS is fundamentally a cheap stock. So what I would be doing at this point is I'd be looking at that as a cheap stock and looking to find a cheap penny option to play on CVS.
All right. Awesome. Thank you for sharing that as well. I hope you're writing all of this down, because there is still a little more to come. And all of this info is worth some really close attention. As reader Mike H once said of Jeff's work, "I've played the market for many years and have experienced terrific success and witnessed others make extraordinary calls, but I must admit I have never seen something this good. Thank you." Jeff, you've made a 40-plus year career out of doing this, predicting resets among individual stocks, both to the upside and the downside. And very famously, in many of your public appearances, you've predicted the crash of a variety of different stocks as well. For example, back in 2019, you publicly predicted the retail company Wayfair would see a massive drop, and sure enough, it did. The stock went on to fall. It was close to 60%, I think, by March of 2020. Back in August of 2020, during another public event just like this one, you made a similar prediction about a Chinese tech company. Actually, can we roll that clip? Take a look at this.
Yeah, another stock I've been watching is GSX Tech. The symbol is GSX. It's a Chinese online education stock, and it's up nearly 500% over the past year. And really, I think a lot of that move is purely unjustified.
What? I've never even heard of that stock, but I'll be sure to avoid it.
GSX Tech went on to plummet by 82%. And that leads us to the next bonus that you are going to receive through today's special offer if you get in right now today. It's a special report called Jeff's Filthy Five. That's a great name there, right? And inside, Jeff is going to actually give you the names and the tickers of 5 popular companies that he believes are on the verge of a major reset to the downside.
Yeah, and I make a point of naming 5 popular stocks, not just the name of obscure companies nobody's likely to own. And that's because as stocks begin to bottom this year, I think most people are going to make a classic mistake. And that is people will assume the next crop of winners will be the same as the last winners of the last bull market.
I see.
And they won't. Not all of them anyway. Many of the biggest winners from the last bull market will go nowhere or they'll continue to fall. While many of this year's winners will be stocks that maybe you've completely overlooked during the last bull market.
Yeah, very good point.
And by the way, this is the sad reality of a reset in the market. People get stuck in old positions. For example, do you realize it took Amazon 8 years to break even after the dot-com crash? Or think about Google. I mean, it took 5 years to break even after the 2008 crash.
Yeah, I'm guilty of doing the same thing. And of course, your Filthy Five report is useful not only as a warning, but also as a potential trading opportunity.
Oh,
That's what we're
absolutely.
talking about.
Some of the best recommendations have come from buying puts on stocks that we suspected were headed for a fall.
Right.
You know, for example, it's how we booked gains of 100% in 7 days back in 2017 on a drop in the iShares High Yield Bond Fund. 120% in 9 days on a drop in the SPDR S&P 500 ETF back in 2019. 110% in 8 days on a drop in the iShares Real Estate Fund back in 2013, and many more.
Yeah, and keep in mind that the last time Jeff published a Filthy Five report like this, he warned about Lemonade before it dropped almost 80%. I remember the AMC Theaters, he warned about that one before it dropped 75%. MicroStrategy, it dropped 60%, and Blink Charging Company before it dropped 50%. Now, Jeff, I know that your free recommendation is still to come, but for now, can you give us another freebie here? What's the number one stock that we should avoid right now?
That you should avoid. Well, I'm going to go back to the well on this one. I got to say Wayfair. You know, I just the company itself can't seem to make money in good times or bad times, and Wayfair's got a pile of debt. They didn't do so well during the. I mean, obviously the stock did well during the whole coronavirus crash thing because everybody was ordering stuff
Exactly.
online at home, but the company couldn't make any money. And if you couldn't make money during what should have been the absolute easiest time for that company to make money, you're not going to do well as things return to normal,
Right.
or if the economy gets disrupted, or anything else. The company's never been able to turn a profit, and they've got too much debt that's coming due, and I think they're going to have to refinance that at significantly higher rates, and that could just be the death knell. So I got to say Wayfair. I would avoid Wayfair.
Gotcha. All right. Duly noted. Thank you for that. And now I know that you've said placing an options trade just as easy as buying a stock. I know you've successfully shown a lot of people how to do this. And we also know that you're giving away free access to your options trading masterclass. But I still got to ask you, what if a new subscriber out there just needs a little bit more help getting started? And I'll give you an example here. If somebody wants to have you hold their hand, so to speak, through this process during the first trading recommendation.
Okay, well, here's the thing. Throughout our industry, I'm kind of known as a trader who's spent more than 2 decades generating millions of dollars for high net worth investors. And along the way, I managed accounts worth up to $30 million apiece. But when I tell people how easy it is to apply my technique in their own brokerage accounts to achieve this same kind of 100% plus gains that I showed my former clients, they often don't believe me. And many folks think only a professional can make extraordinary money in the trading world. And that's simply not true. And that's why back in 2020, when I was quarantined at my house in California with my son Carson, I did something that I'd never done before. You know, I held a public demonstration showing Carson exactly how to place a trade in his brokerage account from start to finish. And the ticker symbol and the execute button, all that sort of stuff. And we filmed the whole thing. In fact, I later did the same thing with my other son, Grant. So today, I'm doing 2 things. First, we're offering you free access to the live demo portion of Carson's trade, so you can literally look over our shoulder as we place the trade. And this way, you can get a behind-the-scenes look at exactly what this looks like. And second, my son Grant is watching our event right now from Florida. And he's agreed to join us here and now on a Zoom call. So just to talk about his experience with all of this. Does that sound good?
Oh man, are you kidding? I love it. We're going to get a firsthand account. That's terrific. Now, can we zoom in Grant? Do we have him on the line right now? Grant, are you there?
Hey, how are you, everybody?
Hey, great. Grant, welcome to the show.
Hey, Grant. Listen, I've just been telling everybody how you essentially went from barely knowing anything about finance to using our trading technique to make some good money in your personal account. Can you talk about that for a bit?
Yeah, absolutely. Well, I always knew my dad was a trader, obviously, but growing up, I was never really that interested in investing. If I had any free time in high school, I was playing baseball or hanging out with friends. But then my family was stuck together in the house during lockdown, and he walked my brother Carson through a trade of Bank of America.
Right. And how did Carson do?
Carson made a killing. He made 114% gain in about 2 weeks, which made me obviously very jealous. But I wanted to start making money too. So I asked my dad to walk me through it all, and I went on to make some pretty nice gains. So for example, back in January, I made $320 in just 4 days. I made $63 in 1 day back in February, and then $206 in 2 days back in March, and much more. So for a guy just starting out, I'm pretty happy with those gains.
Yeah.
Yeah, and if I can jump in a little bit here, I'm really proud of the results that Grant's seen. And Grant, has no interest in becoming a professional trader or anything like that. But by applying it here and there in his spare time, he's made some nice gains. I mean, right on his laptop.
Yeah, it sounds like it. Grant, have you ever had any trouble placing a trade?
Actually, no. So honestly, once you do it once, you learn how to do it forever. Entering the trade is actually the easiest part. For me, it's more about how to find the best trading setups. And for that, I'm lucky to have my dad coach me on spotting those setups and learn how to jump in, grab a quick profit, and then jump out.
I know what you mean. We're lucky to have him here too. That's excellent. Grant, I understand you're a busy guy. This was a real nice surprise. We'll let you sign off, but thank you very much for joining us.
You bet. See you later, everybody.
That's fantastic. Sounds like a nice guy. You've done a good job with him, right? Now keep in mind, everybody, Jeff's Real Money Demo has been one of his most popular presentations in recent years, and as one subscriber from across Jeff's suite of research, Craig M., writes this: Jeff, I've been a member for about 10 months, but I had never taken one of your live option picks until after I watched a video of your son jumping into the action and profiting. I bought the GDX calls about a month after you recommended and just sold today for a 220% gain. Thank you for a great pick. Jeff's Real Money Demo is yet another bonus that he could easily spin off as part of an educational course costing thousands of dollars a year. But if you take advantage of our special offer today, before it expires, you will get it free of charge right now, where Jeff walks his son and you through an actual real money trade from start to finish. And of course, you're also going to receive 1 free year of access to Jeff's 24/7 Delta Direct, where he posts real-time market commentary and recommendations. Plus, don't forget free access to Jeff's Filthy 5, plus free access to Jeff's Options Trading Masterclass. And of course, you'll also receive 50% off Jeff's long-running and best-selling Delta Report. That's where you'll receive a new trading recommendation every single week, along with immediate access to his current model portfolio of open trading recommendations, plus a free second year. Got to remember that too. And an extra $500 off if you get in tonight. Then you're also going to receive yet another bonus that we didn't even have time to cover in today's event. That is let's call it a mystery gift, right? That others paid up to $1,795 for to receive at an exclusive conference last year in Washington, D.C. You're going to receive that absolutely free of charge. So if you have not placed your order yet, what are you waiting for? Click the button right now that you see on your screen. Our college-educated, Florida-based member services team will answer any questions you have, and they can help you secure your spot right now. I think you're going to find this offer is more than worth it. A subscriber, Thad M., wrote, Jeff, I just made 538% on one trade and 426% on another. I've been a member of Delta Report for a while, and this is exactly why. The Delta Report adds another element to my portfolio to take advantage of quick moves just like this, especially in my self-traded IRAs. Thank you for all you do. Jeff, that's a perfect way to wrap it up. It's been a heck of an event, right?
It has been. It has.
For the first time in a long time, I'm actually feeling excited about
good
the
to hear.
market again right now. We're starting to run out of time here, but before we sign off, I'm going to give you the last word.
Sure. Well, I said it before, and I'll say it again. This year, I'm thinking the market's going to see a historic reset to the upside. The bank runs and the other shakeups that we've seen are the first symptoms of a major move as people begin to move their money on a historic scale. But if you wait around for the perfect moment to get in, you're very likely to miss it because it's not going to be a classic bottom. In other words, we're not going to see a fixed single-day turning point where everything goes up at the same time and leads to a runaway bull market. Instead, we'll see a rolling bottom. Stocks will bottom at different times in what could be a very confusing and very choppy market for much of the year. Overall, though, we're headed back up. But rather than back up the truck on stocks or an index, you can make 5 to 10 times more money in a fraction of the time without the risk of owning a single share by using our technique on every move along the way. And this is exactly the kind of environment where our trading technique thrives. And I've waited literally more than a decade since March 9th of 2009 to see a reset of this magnitude. It's going to be an exciting time for traders. And if you miss it, I think you're going to regret it. Seriously. Move your money by May 1st.
Excellent. Thank you very much, Jeff Clark, for being here. And of course, one last thing, we've got thousands of folks watching right now with pen and pad ready to take down your free recommendation. Still game for that?
Absolutely.
All right. Keep in mind that the last time Jeff gave away a free recommendation, it shot up as high as 23% in 8 days. So with that, Jeff, take it away.
All right. Well, look, my free recommendation is this. You can see it on the screen right now. And there you have it.
Awesome stuff. Thank you very much, Jeff Clark. And with that, place your order right now. Listen, you got to take advantage of this special offer before it goes offline forever for the best possible deal. On behalf of Omnia Research, I'm Chris Hurt. Hope you enjoyed today's event. Thank you for joining us.